Hey, welcome everybody. Matt Thomas here from Compass and the Altitude Group. Brian Dewald from Dewald and Associates and Fairway Independent Mortgage. Brian, how you doing?
Great, man. Always excited to see you on this. Thanks for having me.
Yeah, absolutely. Yeah. You looking sharp? Got your haircut? I just got mine haircut too, so I guess we're both ready for this.
The summertime skin fade going. It's working great.
That's right. Yeah, I got the white walls now. I got to kind of get some sun on that a little bit. But,
there you go.
Well, very good. Brian, let's, I know obviously it's the week right before 4th of July, so not everyone's focused on getting it home. For those of you who are, we got some good news this week. Is that right, Brian?
Yeah, so it's this interesting concept anytime we hear the Fed doing what they're doing, right? And to kind of just do a quick refresh of what we'd already had talked about. When the Fed is moving rates, it's already known, right, in the mortgage world. And it's known if you and me are hearing about it on the news, and we hear, we anticipate this is what's going to happen. Believe me when I say our markets have already since adjusted. So the good news for the mortgage world, I'm not saying it's good news generally speaking, but the good news for the mortgage world is that, the Fed did a little bit of a different play on things where they were talking about 50 basis points, 50 basis points, 50 basis points, which is 0.5%. They actually went to 0.75%, 75 basis points. When that happened, and we anticipated that if that happened, that we would see some good news out of it. When the Fed bumped it another 0.25% and raised it a full 75 basis points, we started to see markets rally from a bond standpoint, right, which is good for mortgage rates. So we've seen not huge drops by any means, don't get me wrong, but kind of chipping away at what we've seen from a just an overall standpoint. So definitely seen some nice gains this week. So we'll cross our fingers that continues to happen. So
okay, good. Well, Brian, excuse me. I think what that really points to is look, that you're going to hear one thing, and that's the whole point of why we do this. You're going to hear one thing on the news. You're going to say one thing, and it's probably going to be bad because that's what catches people's attention. When I talk to people who are not paying attention to real estate, they immediately just think, "Gosh, things have turned and things are bad." Things have shifted. Things have adjusted. There's no doubt that the rates are, they've basically doubled since the beginning of the year. But there's adjustments that happen every week. There's adjustments that happen, whether they're micro adjustments or whatever. And stability and obviously the things you just mentioned really help to bring rates kind of into focus and a little bit more attainable, it sounds like, rather than being totally sky high. And that's really what we're trying to let people know about is that there's hope, and that there's, even these micro adjustments can help you out in the long term as you're looking to find a 30-year mortgage.
Yeah, those are really great points, Matt. So thanks for bringing those up. And, in the grand scheme of things, it's when we hear some of the numbers, it's not nearly as bad. Like you said, the media and the news and, how they're making it out to be. When I have conversations with folks that are looking at billion-dollar properties, they're a little surprised at how, and this is all relative, of course. So, but in the grand scheme of things, it's not as bad as anyone makes it out to be, in my opinion. So.
Right.
So plenty of.
Well, I know we've made the point, and others have made the point. Hey, it's rates they're not what they used to be, but they're historically not terrible. It still feels bad if you're used to rates being under 3% or near 3%. It doesn't pay your bills. It doesn't make it easier to qualify for a mortgage just because it's not historically rock bottom anymore. It still stings compared to what it used to be. However, it's not as unattainable as people think. We've just got to adjust now. This is the whole point of a shift. We've got to shift or adjust what we're thinking about what it takes to get into a home. There are some great products. There are great rates. I think another thing that's really important to understand is that over time, there's going to be, you mentioned it last week. Over time, there's going to be opportunities to potentially refinance. But what may happen, and what people are still potentially projecting will happen, is that rates may continue to go up over time. And whether that happens the next couple of weeks or the next couple of years, that still makes today very favorable. So is it favorable compared to January? No. Is it favorable compared to maybe what it might be next January, the following January? It probably is. And if it's not, you can refinance out of those. We talked about a product, and I think that I'd seen somebody made kind of pointed to that was like a 2-year solution. Tell us about that. You said you didn't recommend it, but there are, again, depending on what you're buying and for how long you're going to buy it for, there may be arms or different things where you can buy down your rate significantly and get a significant price drop.
So a couple thoughts there. And we don't have enough time this evening. Maybe on another future call, we can talk about ARMs and adjustable rate mortgages. I think generally speaking, they're a bad idea. And to add to that, the markets agree with that statement or that theory. Long term, it's not a good product in most people's opinion. There's a new kind of I don't know who came up with this recently, but it's been relatively genius. Whoever came up with it's getting a lot of play on it. But it's the theory of marrying your home and dating your interest rate. So a couple of takes on that. There's a couple products out there called there's a 1-0 buy down and a 2-1 buy down and a 3-2-1 buy down. And basically what that is it's a product where the seller can pay some fees for the buyer to obtain a lower interest rate in the short term. So, if we're looking at a specific rate, the first year is a 2% discount on that rate. The second year is in a 2-1 buy down scenario. The first rate is a 2% discount. The next year is a 1% discount, and then the following year is whatever today's rate is in theory. So there's a cost to it. Typically, that gets picked up by the seller. The other way to look at it is just to do, seller concessions to just get a one shot at a lower fixed rate. We're seeing a lot of that lately. I've got a really cool program where we can look at some of those options. If the seller's interested or up for taking a price reduction. In lieu of that, what we're seeing is using some of that price difference to afford a buy down for the buyer's sake and obtain a lower rate. And then there's no cost to the buyer in that scenario. It's really slick. Yeah.
Well, and it's not an out-of-pocket cost to the seller either. It's paid at closing.
Correct.
And, it really comes out exactly the same. If you were to, we talked about this a little bit last week. If you were to offer a $15,000 price reduction, you might bring some people in, you might not. But what you could do instead is take that money and put it towards this rate buy down for a buyer, make it more attractive to them. You're the seller, you win because you've now got somebody who's interested and can better afford the home that you have for sale and want a certain price for. And so what happens a lot of times, Brian, like these small solutions, sometimes the ARMs or whatever, there's a lot of these programs that a lot of people hear about on the radio and then TV and stuff like that I think we all know are kind of, they're meant to kind of hook people and reel them in, right? It's them to contact, they reach out and call some number and now they're talking to a mortgage professional and they're like, wow. And then all of a sudden they start their spiel and tell you how bad those products are. We're obviously telling you right now, like Brian's my trusted go-to mortgage lender, and he's telling you that's probably not the best way to go with these ARMs and different products like that. So what happens is instead, though, is he can lead you to the right product that makes sense for you, and that's obviously what we're trying to bring you is a trusted resource to be able to figure out what's right for you. And know that it's not always just what meets the eye, what you may or may not hear on the radio and the TV spots and different things. There's no ad that we're trying to get you to, sucker you in on to get you to speak to somebody like you're going to hear from these other folks. But know that there's still maybe, fantastic products out there or solutions to be able to navigate today's real estate market and then the mortgage rates as they've adjusted up from what we were used to for so long.
It's true story.
So yeah,
great points.
So a long way of saying, hey, just make a call and contact somebody that you absolutely trust. Brian is a great example. Let's give Brian a call and let's figure out what might be in store for you that you can find a better solution. If you're still interested and ready to buy in this market, or maybe disappointed or a little put off by some of the news you're hearing, again, it's the whole point why we do these every week, to give you the latest and greatest news. So with that, Brian, you're in Florida. You're going to enjoy the 4th of July down there?
Yep. They got a cool little celebration they do out over the water, so it's a really pretty view where you can see the reflection of the fireworks and stuff. So, it's a good time.
Awesome. Yeah. And obviously, Brian's a local Colorado lender. That's and just like you'll be gone, I will be gone. I hope everyone gets a chance to do what they would love to do this 4th of July. I tend to celebrate mine out of town very often as well. It's one of my favorite holidays, and we're usually in Iowa, long story, but that's a family destination where we get to go to somebody's farm and light off a whole truckload of, like, literally a truckload of fireworks. Or often we're at a small town in Idaho, so either Iowa or Idaho. But in any case, we're both available this weekend in terms of if you've got any questions about mortgage rates or the real estate market. Otherwise, we will hope you all enjoy your holiday weekend. And Brian, we'll talk to you next week.
Happy 4th. Appreciate it.
Yeah, you too. All right, buddy.
All right, bye-bye.